welcome to everybody attending this last Pitso for this year. And I think it's also the most important one, the medium-term budget policy statement. And for a change, I think there are more people happy than there will be people that's unhappy. And when last have we heard that? Even opposition parties, by and large, applauded the minister's medium-term budget policy statement. So thank you very much for everybody here. I'm going to hand over to the moderator of this discussion. But before I do that, I just want to say thank you to Marley Moelman, who's been with the Pitsos for a long, long time. I think probably since we started. She's done a sterling work. We're going to miss her. And thank you, Marley, for everything you've done for us. And then with that, I give it over to Kaya Sitole, who will be the moderator of this discussion.
Thank you very much, Pete, and good afternoon to everyone, and a special welcome and goodbye to Marley, who has been the brains behind the logistics of these conversations throughout the year. So we finally got to yesterday, and yesterday was a bit of an interesting day. We assumed that the scars of earlier this year, when National Treasury finally learned how to its way through a budget and finally learned what the trade-offs were, was going to translate a better executed budget yesterday. Did we get them? Well, that was the first part. The second part was the big talking point about this mystery of an inflation target that seems to have been cast in stone for so many years, until suddenly we started hearing from the Reserve Bank, actually, it isn't gospel at all. And not only is it not gospel, they kind of didn't like it. National Treasury said, but we like it, and we're the politicians that must like or not like. And then suddenly of the minds. And then ultimately, it's still a matter of trade-offs. Today, are we happy? Are we comfortable with the trade-offs that are proposed? And more importantly, can we then use yesterday's conversation as a proxy for what you expect in the big budget next year? Might be in February, we do not know anymore. So that is the essence of what yesterday was all about. And today we are joined by a panel of individuals with individual and collective expertise in looking at all these things that we're going to be talking about, spans many decades. And of course, we decided that today it is these individuals who are going to talk us through what we heard yesterday, what we understood to be hearing yesterday, and whether it means that we're in a better trajectory as a country. My first panelist is Dr. Faza Jamin, who is no stranger to these conversations. He's a very well-regarded and esteemed economist who probably has a much greater database of all of these things more than anyone else that I know. We also do have Professor Raymond Parsons, who looks a bit sanguine, but this is the man whose ability to remember how it all started, what we've said and what we've done before is invaluable. And of course, we're also joined by Sikonathi Mantshantsha, who has been within and outside the state. He has worked in various capacities, whether it was to be ESCOM, whether as a journalist, and it's a person who, I suppose, when we speak about the procurement dashboard and the procurement database that tells us who gets paid what, he must have been smiling. Will it be good enough? Will it prevent another Tembisa hospital? We do not know. So that is the essence of the conversations that we'd like to deliberate on. We also do like to hear from you, so please do use the chat box in instances where you'd like to pose a question to our panelists. The first one, Dr. Jamin, is the academic, technical, and very confusing question for a lot of people. For many years, 3 to 6% seems to be the guiding light. It was the northern light for South Africa's decision-making, proctored by the Reserve Bank. A couple of years ago, suddenly the Reserve Bank governor started being a bit more emboldened in saying, wait, hold on, actually, this is not the gospel as we think. In fact, we as governors think otherwise. But of course, there was then the question of, well, does he have the authority to even tell us this? Now, yesterday, suddenly, after many back and forths, we saw some emails exchanging hands earlier this year. There seemed to be a meeting of the minds. Talk us through firstly the history. 25 years ago, somebody decided 3 to 6% was the answer. Who was it and why?
Yes, it goes back 25 years. You're quite correct. During the late 1990s, it became a common practice amongst leading economies to establish inflation targets as the primary means of trying to reduce the inflation rate. There was no question about it that in the late 1990s, people had become disillusioned with the earlier stance, which was to try and manage the growth in the money supply as a means of trying to limit inflation. And as a consequence, you had a complete change in regime amongst many, many countries as a of this. However, South Africa came in, I suppose, a couple of years after the other countries. New Zealand was the first, and at the time, our inflation rate was coming off almost double-digit levels, but it was deemed prudent to, in the context of where it was, to reduce the inflation rate to introduce an inflation target of 3 to 6%. This gave the Reserve Bank a wide berth through which to try and control inflation, but it had the unfortunate effect of getting people to focus very much on achieving a 6% inflation rate rather than a lower 3 to 6%. So generally speaking, everyone regarded the inflation target as 6%. And inflation remained high and going above and below 6%, not coming down significantly to 4 or 3%. And in around 2017, the Reserve Bank, in its wisdom, decided and stated quite publicly that the Reserve Bank was now actually targeting 4.5% rather than 6%, which was the midpoint of the inflation target. It didn't require a change in the actual target, but it said its preferred goal was 4.5%. And lo and behold, what we did see was that inflation rates started coming back down from 6% odd to 5%, 4.5%, and thereabouts. And as a result of that experience, the Reserve Bank felt that it was a very important tool for influencing inflation expectations, and more recently helped along by the fact that the inflation rate did indeed come back down to 3% and to below that, partly as a result of sharply lower fuel prices. It thought this was a very opportune time to take advantage of the situation and actually say that it really wanted a 3% inflation target to influence inflation expectations downwards. Now, by influencing inflation expectations, it would result in businesses increasing prices, feeling pressured to not raise them quite as much. Same thing with, well, the hope was that trade unions would start limiting the extent to which they wanted to have wage increases, and private and public sector bodies such as your medical aid schemes, your schools, your and the likes of Eskom and Transnet. The idea is for them to feel even more guilty now if they announce increases of 8 to 10%. And that was the logic behind it. And the Reserve Bank quite rightly says that if they can get inflation down to 3%, this is the best facilitator of getting interest rates much lower than they are currently. And it'll be interesting to see whether next week they will actually go ahead and reduce the repo rate by another 0.25%. And the people are worried that they will deliberately keep interest rates higher than would otherwise have been the case. But by reducing inflation, they have also contributed to the inflation target. They've also contributed towards strengthening the Rand's exchange rate. And that in turn works in their favor, because we're seeing in the last day alone, the inflation rate has, the exchange rate of the Rand has fallen by 1%. Has risen by 1%. Against other currencies, the rate has declined. And this means that there's going to be a further decline in inflationary pressures, which is a very positive trend to actually see, and will facilitate lower interest rates in due course.
Very much, Doctor, for that very important historical context. And I think obviously for a lot of people, that is a very important starting point. Professor Parsons, I mean, I'd like to come to you here. A lot of people probably would have picked up a document or even checked online to say, well, what is inflation to begin with? And somebody comes up and says, well, it's simply the growth in prices. And then the question is, well, actually, I don't want things to be more expensive. So why do we even have 6% as a starting point? Why do we even have 3% as a starting point? Surely, the lower it is, the closer it is to zero, the better it is. Talk us through why it's important to have a particular range, a particular reference point for inflation.
Well, I think, as my colleague has pointed out, there's a long history over the past decades where about 30 or 40 economies in the world have adopted an inflation targeting regime. And if you do your global research, of course, there's more than one option. You can have a band, even at a lower level. You can have a fixed target with a tolerance, which is what we've opted for. So I think the important point is that low and stable inflation is in the longer term much better for the economic performance of any country. That said, it's not always easy. The issue of monetary policy is very complex. I think, without wanting to repeat what was said by my colleague, and not wanting to strike a false note in the hallelujah chorus about the lower inflation target, because I share that decision. But I think the important point here is that we've opted for a flexible approach, which is very important. That has been a hallmark of the approach in the past by the Reserve Bank, but their argument was that 3 to 6 was just too flexible and created the wrong inflationary expectations. So what the minister said, and I think rightly so, after engagement with the Reserve Bank, is he's going for a flexible regime, which says it will be implemented over 2 years, and it will be having a 1% tolerance, which I think is very appropriate to the uncertain world in which we live, both in South Africa and abroad. The second point is that he also made the point, and let not us on this panel overlook the fact that he acknowledged that there will be a cost. This is not a frictionless exercise, and we mustn't pretend it is. We're not running a seminar, we're running a country. So there are trade-offs. So the minister's made it very clear that there will be some price to be paid in the short term, and it may even make his fiscal targets a little more challenging to in fact, meet. Because remember, when we get into the nuts and bolts of the budget and fiscal policy, the golden thread that runs through all his arguments, his positive arguments, and his good news is, look, I fully take on board the fact that all roads lead through the growth rate, whether we talk about fiscal sustainability on the one hand or about job creation on the other. I need to come up with a fiscal strategy and reinforce an economic strategy which makes higher job-rich growth possible. Part of that formula is we must get inflation down. But as I said earlier, this is not a frictionless world. And given where we are with Eskom tariffs, water tariffs, all these uncertainties, it's clear that the right package was to say, we are heading for a lower inflation target now. It's going to be implemented over a 2-year period, and we are allowing a band. And I don't think one could ask for more. Now we've got a certain decision, which the markets and business should now welcome. There's certainty about where the target in monetary policy will be. Now we've just got to make sure that the fiscal side is reinforcing what we want to see in terms of the budget, in terms of the mini budget's goals as a whole, coming back to what we want in terms of our growth and employment and ultimately investment, because the growth forecasts, which I think we'll discuss shortly, are predicated over the next 2 or 3 years very much on a recovery in fixed investment, especially by the private sector, but also on the infrastructural side. So it's important that you fit your inflation target handling, and the way you wind down, if I can put it that way, to your 3% must be consistent with what you can achieve in other areas of policy, so that you have a cohesive, certain overall approach to the macroeconomic environment, which will give business the certainty and the commitment that they need, and which I think to a large extent this mini budget has provided for now.
So then, Professor Dr. Jamin, I'm going to come back to you now. I remember particularly at the beginning of 2022, when the conflict between Russia and Ukraine started, it clearly precipitated a lot of exogenous factors that simply escalated all the metrics that we measure, inflation, cost of living. So when you have a lower or perhaps a bit a narrower band, when you have that impact of those exogenous, extraordinary factors that we've seen once in a while, whether it was during COVID or the aftermath of COVID, or even that conflict, does that then simply mean that under a new regime, the panics would be much greater? The question of what to do and how fast to change interest rates, for example, would be much more different when you're working with a narrower band and you simply cannot control these exogenous factors that we do know materialize from time to time.
Very much so. Having said that, it was interesting to note that the government announced a tolerance band of 1% either side of 3%, which theoretically means that when you get close to 4%, there will be an inclination for the central bank to be very reticent to cut interest rates. Conversely, when you get to 2%,
Dr. Jamin, you just muted yourself. Please unmute. Please unmute.
Sorry, there will be, as I say, there's a tolerance limit that's been given of 1% either side. And basically that is a measure that has been adopted by many, many other countries. In that regard, I want to just add that a very important reason why the Reserve Bank also wanted to cut our inflation target is that most countries in the world are now sitting with inflation targets in developed countries of 2% and in emerging markets of 3%. So with us effectively targeting, as we were until yesterday, 4.5%, we were an outlier and risking having higher inflation than most other countries, which in turn would contribute towards currency depreciation and higher interest rates than would otherwise have been the case. But we do have a tolerance band of 1% either side. And the point I was making is, I think there's a risk now that if we get inflation coming close to 4%, the Reserve Bank will stop cutting interest rates.
I would just like to add an important point here, if I may just add to emphasize, is that a large part of both the inflation targeting decision and other elements in the medium-term budget policy statement revolve around ensuring that South Africa will be more competitive, given all the changes in the global landscape, given the threats that we are facing from the United States and other areas about the whole tariff story. We need to be mobilizing our policy at all levels to ensure that our growth rate is supported by being globally competitive. And so this is part of the bigger package that emerged from the speech yesterday.
Just one last follow-up there. A lot of people have then simply been asking that, well, now that you've ushered in a new regime, does this simply mean that at your next interest rate decision-making conversation, which I think is imminent, you now see an acceleration towards lower interest rates? What exactly does this mean? Because up until yesterday, the range was 3 to 6%. We're now saying that, let's say, the range is 2 to 4%. So if everything else remained the same, would a conversation next week that says, wait, hold on, our repo rate and our prime rate are XYZ, but now with a narrower band, with the seeing now, we think that, how do you read that?
I certainly read it as being a very relevant possibility now. And the reason I say this is that when the Reserve Bank in July first said that its preferred, and this is the term it used, its preferred inflation target was now 3%, not 4.5%. It also produced a number of scenario forecasts, including that the forecast made by the quarterly projection model, which it owns, which now suddenly incorporated 5 more 25 basis point rate cuts over the next 2 years, as compared with the one 25 basis point rate cut that previously prevailed. So in other words, the Reserve Bank has already hinted that it may now cut interest rates by full 1% more than would otherwise have been the case, because it has been allowed to, because we are now following a lower inflation target. So that's the good news. And it feeds through, if you look at the forecasts of the National Treasury, it feeds through into a slight upward revision in forecast growth of consumer spending specifically. But what is quite clear, and Professor Parsons alluded to this, and it comes through if you analyze the figures very closely, it's not a quick fix. There is a cost, and there is a cost in the short term in terms of not only having to maybe be a little more reticent in reducing interest rates in a hurry, but also because a lower inflation rate means less growth in the nominal value of rands circulating in the economy, the so-called nominal GDP. We've become accustomed in the past many decades to adjust for inflation and say the GDP growth rate is 1% or 2%. But in fact, if you take into account inflation of 4%, you're talking about a nominal growth in GDP of 5% or 6% if you've got a 2% real growth rate, if you add 4% inflation. Now, that figure of nominal growth in GDP is critical in determining the likely increase in tax revenue, because people pay taxes not according to an inflation adjusted figure, but according to the rand value of what they earn and what they spend in VAT. And so, as Professor Parsons alluded to, what we're now seeing is, with a lower inflation target, the growth in government revenue a year or two out is now being revised downwards, not upwards. The good news is, however, when you then apply the lower inflation rate to what's going to happen to interest rates, and long-term interest rates are set to fall by more than would otherwise have been the case, the lower rate of revenue growth that we now anticipate because of the lower inflation target is more than being likely to be compensated for by a reduction in the amount of interest that the government pays on its debt. And so we end off in a better place than we were before. But it's going to take a couple of years before we actually see the full benefits of this appearing.
That's why the important point here is that after yesterday, we want to see a lot more consistency in the different elements of policy to give us that outcome. Because the fact remains that if you look at the metrics of the budget, let me just mention that point. You look at the metrics, we all talk about the deficit before borrowing, the deficit, the total deficit in relation to the GDP. That is the golden thread. That's the assumption that you're making throughout your fiscal strategy. If something goes wrong with that, your numbers are out and the markets will get upset. So it's a very delicate exercise. And secondly, it's an open question, as I think has been hinted. Next week's meeting of the Monetary Policy Committee, will they open the champagne and cut interest rates by another 25 basis points? Or will they say, no, we told you to get to 3%, we will have to keep interest rates higher for longer in order to get there? So I think it's an open question which way the Monetary Policy Committee will go. Hopefully there'll be a robust debate among the members of the MPC as to what do you decide now in the light of the so-called mini budget
policy changes. All right, Sikodati, earlier this year there was a bit of tension when the Reserve Bank seemed to have pressed the button too early. And of course, National Treasury said they've got absolutely no right to even know what the button is. Generally, politicians do not yield. And it seems yesterday the consensus was that the politicians, the finance minister, had yielded to the superior technical viewpoints that seem to have been promoted by Treasury. Firstly, that was surprising for a lot of people. But more importantly, is this the right call? Is this the right way to manage these very difficult public policy trade-offs. You have one institution says that this is the basis for our informed decision making, and another looking at it and saying actually yes or no, because it's an important question of who gets to decide these things.
Good afternoon, colleagues. If you can hear me, just show me a finger. I haven't. Thank you. It's definitely we have to take our hat off to the Reserve Bank here, to Lesetja Kganyago in particular. The strategy he played, they have already discussed this for many years, as the good professors have just said now. It had been discussed with National Treasury and the Reserve Bank and all the policymakers, but the government has got this habit of never doing anything in a hurry, taking their own time, and the Reserve Bank just pulled the carpet under their feet and went right ahead and announced that there will be a 3% target. Of course, you do know that the finance minister, Mr. Kotongwana, was not very pleased with that. But what the Reserve Bank did actually do by making that announcement publicly and saying they will implement the new target imminently is force the government to finally arrive at a decision and give a go-ahead. It was immediately discussed at the National Executive Committee of the ANC and thereafter, soon thereafter at cabinet level. So we could move beyond the talking, which had happened and happened and happened. It's the best possible decision that the people of South Africa can really have from the government in a very long time. You see immediately the benefit, as Azajamin has already pointed out. The benefit on day one immediately, the rand has strengthened, but over the past 6 months, it has strengthened by about 14% since Lesetja Kganyago came out into the public and said, we will lower this. So the benefit of that is that you and I, in the long term, will be paying much lower interest rates than we otherwise would have. What's the best other? What's better than that? Getting cash back into your pockets, particularly in such a depressed economy for a very long time. You do know, of course, Kaya, that there are politicians, particularly when the Communist Party still thought it had any relevance, they really wanted an even higher inflation rate than we do have now, but they have totally been neutralized, and this is the best thing that can happen, in my humble opinion.
Speaking of the lethargy of politicians and delayed decision making, 10, 15 years ago, we all said there is a problem in public procurement. Somebody said, aha, let's be as transparent as possible. Let us figure out who bid for a tender. We published the results of that, and Tembisa Hospital still happened. The minister yesterday refers to Tembisa Hospital, and then boom, we've got a new dashboard. What the dashboard is meant to do is to tell us that that R1 that disappeared yesterday went to Sikonati, but Sikonati is then related to Raymond, who received the other R2. So therefore, the sum cash windfalls to them is R2 and we do not see the value. What is the importance of this dashboard? Does it change anything, or is it yet another political gimmick?
It's absolutely brilliant. I must say my colleagues here at News 24 started last night already using it, and we already have seen things that we didn't know previously. It's quite important for the public to know how the money is being spent, who gets paid what, and why, and that is the most important thing. It's a good start because it's not the complete procurement system. You don't see municipalities in there as an example, and you don't see all the state-owned entities. But transparency contributes to lowering corruption at every level. There is no instance in public procurement where transparency is a bad thing. So we now just have an additional layer where we can, for sure, without too much trouble. Previously, you had to file in prior requests and stuff like that. Now you can just log on and see where the money goes. The net effect of that is that there will be more transparency, and transparency can only be a good thing. The taxpayers deserve to know where every cent, where every rand of their tax money goes. And I can't emphasize enough, Kaya, that transparency can only be good particularly in public procurement. So kudos again to the Finance Minister and indeed National Treasury for finally making this happen. They've long promised it, and they even said, particularly Gauteng government back then, and they went back on it. They said the public is welcome to sit in tender decisions where they get, but that in effect, that has never happened because the decisions get made in very smoky corners and papers get filed and stuff. But there is, now you follow the money, you can see exactly where every cent goes. Let me repeat again, it is the best possible thing that could happen. So we now know who gets paid what without any trouble.
I mean, I'm an auditor, and sometimes auditors get accused of showing up too late. I suspect that we can go to the dashboard. It will tell us that last week, Dr. Jamin did receive 100 Rand. What do we do with that belated discovery of information? Do we then have the capacity to say, wait, hold on, I was in that hospital. I didn't receive that Panado, so why did you pay him? What can the utility of such a dashboard be for citizens?
I'm sorry, Kaya, I didn't quite, it's not terribly clear. I didn't quite get the question.
What is the utility of such a dashboard for citizens? The transparency of the procurement.
I'm sorry, I'm struggling to hear it properly.
Perhaps I could come in and just say, please. I think while we're just clarifying the sound, look, I think that's a very important step in the whole transparency of government spending. We know what these hearings are revealing about corruption and so forth. This is one area in which the Treasury can make a difference by insisting on that transparency. The issue of government spending falls into two parts. Apart from giving the public the assurance that every rand being spent for which they have either paid through a tax or which we've borrowed, on which we're paying too much interest, that we're getting value for money. And I think that's tremendously important. It ties in with the whole delivery challenge. And I just want to say in that regard, I'm very pleased to see the extent to which in this particular address, there was reference to the increased partnership and collaboration with the private sector to get things done and to get them done quickly, hopefully within certain timelines. I think that's quite important. The second is the total amount of spending. There, I think we are seeing some progress as well, to say that there are things that the government should do, there are things the government should not do, and there are things the government should ensure are done. That's where the private sector can certainly make a very big difference. So I think, once again, the overall message of this particular medium-term budget policy statement was, we are turning a corner on a whole lot of these issues, and now we've got to build on them. And certainly the issue that you've raised about transparency, to try and build trust, because one of the big issues is the extent to which we live in a low trust society. The government's not trusted, other stakeholders are not trusted. It's tremendously important that you come up with a fiscal and economic strategy, which, as you unpack the components, they are credible and they help to build trust. And that's one of the biggest messages that I think comes out of the statement yesterday.
Thank you, Professor. Dr. Jamin, I hope you can hear me now.
Yes.
Yes. I know you can hear me. One of the key focus areas is the simple question of whether we're simply not borrowing our way into obscurity. The question of the debt GDP ratio and the stabilization thereof is an important one, particularly when the first 22 cents of every rand that we make does go towards debt. From what you heard yesterday, are we heading in the right direction, or is it simply a matter of some of the potential demands were simply not canvassed yesterday?
You're absolutely correct to ask that. And frankly, if you look at the graphs and the numbers, what you actually pick up is that it's a very, very big ship that we are trying to turn around. This ship of rising public debt has been accumulating for the last 16 years. And now to try and turn this around is going to take a long, long time. Even as we see the numbers, the actual budget deficit is set to decline to 2.7% of GDP by 2028-29 from 4.5% of GDP currently. Even at 2.7% of GDP, that is still much a higher deficit than the growth rate of the economy that we hope to achieve in that year, which is 2.1%. So, in fact, quite startlingly, we are lauding the reduction in our debt servicing bill, but the growth is still there. As a percent of overall government revenue, debt servicing costs are still going to be rising, just much more slowly and by much less than the differential between growth in debt servicing costs and growth in overall expenditure is going to be much less than it has been. 3.8% per year compared with overall expenditure of 3.6% per year. But previously, we were anticipating 7.4% per annum growth in the interest bill. So between now and 2029, we're still going to be sitting with a public debt to GDP ratio in the mid-70s, not far below where we are now. With one possible ray of light that could emerge, if you look at the forecasts of precious metals prices contained under which the budget was formulated, they're looking at the gold price next year of $3,800 an ounce. Well, this morning it's already at $4,230. The same with platinum. So we may end up getting a bigger bonanza from revenues from the mining companies than quite rightly, the National Treasury has not banked on it and has been cautious and taken the cautious approach. But there is a possible upside. And if that happens, then the challenge will be to use that to retire debt more rapidly rather than to go and spend it again a while. It's going to take many years to turn this ship around. And for those who were hoping that this mini budget would provide an immediate boost to the economy, they are mistaken. This government cannot do that. There are some more fundamental structural issues other than just electricity supply, logistics efficiency, water supply. There are fundamental structural factors such as corruption, criminal syndications, poor educational outcomes, spatial inequalities, the lack of vibrancy of small business activity. Those remain in place, and it's too much to expect one medium-term budget policy statement to address all these all. But what we need is a comprehensive strategy by the Government of National Unity to start addressing more even than Operation Vulindlela is tackling at present.
But that comes back to a total economic strategy, of which yesterday was an important part. But we mustn't underestimate yesterday, because a turning point is tremendously important, given the track record of the bad news we've had over the past few years on the fiscal front. And I think that's a very important point to bear in mind. So that's why the markets have reacted so well, because they see there is a determination now to turn it around. We still don't know, of course, because there are a number of assumptions, and you, I think, raised the point earlier. We'll only see the full picture on the fiscal front when we get to the main budget in February. Will we have averted any tax increases? So it depends on how the economy plays out. But I think, let me make this broader point. Perhaps I should leave it to the political scientists to make it, but many other governments in the world, faced with key elections coming, could have gone on a spending splurge, could have said, we have to rationalize why we have to spend more here and spend more there in order to secure the outcome. This has been resisted in this budget. It has been resisted by the government of national unity. They have opted for a conservative budget, laying the foundations for a bigger, stronger, and better economy in the years ahead. And I think, although that's a point that the political scientists should perhaps develop, I think it's a point I'd like to make, because it could easily have come out differently if you had allowed election factors to dominate fiscal policy. And it's clear that that is not the case here, that there's a turning point in order to ensure our fiscal sustainability as being in the long-term economic interests of the country.
Doesn't prevail for now. Sikolati, again, politicians repeating is so rare, we always have to reflect on it. One of the points that the minister raised yesterday is that a few years ago, they thought that there would be a good idea around supporting transport sector in particular grants, and they've now just realized that it's not working out. So they're canceling that. Again, it is rare for politicians to admit that perhaps a course of action is not yielding the desired results. That was the first one. The second one is that it seems that whilst we spent an entire decade waiting for the horror show of what organizations like ESCOM or even PRASA would be asking for bailouts, the minister says that, look, we can see the turnarounds, we can see what is happening, that is being done well in those entities, and we're going to give them the type of strategic support that enables them to deepen and to entrench those good wins. Is this reflective of a greater turnaround across the state entities portfolio in particular?
Kaya, it's quite difficult to see any turnaround. Well, in the absence of load shedding, I think we should worry more than we actually celebrate. The fact that we have an economy that has been growing at 0.6% and now may double to 1.2%, as the finance minister says, and we have not had load shedding for more than a year now. That in itself is a good thing, but does it mean the problem has been resolved? Absolutely not. What are the volumes at Transnet? I see the finance minister specifically referenced the passenger train volumes at the passenger rail agency, which moves people rather than goods. Now, at about 77 million passenger trips, that's still less than 10% of, or just about 10% of the trips that that entity, which has been destroyed by the same government, did 14, 15 years ago, when it carried 700 passengers, 700 million passengers back 10 years ago. Today, we have to celebrate that it has now doubled again its passenger numbers to about 70 million people who are paying not much higher than they did 15 years ago for a train ride. That is not something really to celebrate at all. The fact that we have the private sector really trying to help Transnet. If you drive on the N12 between Johannesburg and Maputo in Mozambique, you'll see more trucks than you have ever seen going there because our own government has destroyed the Transnet that actually eased traffic on the road and put all those goods on the train to Durban. We have lost that business now. It's going all the way east to Mozambique. So the finance minister has to do what they can do. But what this country really needs is a government that actually knows what the business of government is, make it possible for people to do business as cheaply as possible, make it possible for people to employ as many people as possible. If you destroy the infrastructure, we are talking every day in Johannesburg about water, huge suburbs running out and having no water. Up the road here in Randburg, the traffic department has no water. Hospitals have had no water for days. So are we on the right track? If we measure our progress by for example a lack of load shedding, sure we are, because I mean 3 years ago when I was there, we were not able to deliver any electricity at all. Things have changed. That's something that's something to take our hat off to. But are we on the right track? Do we have an economy? Is it correct to celebrate an economy that will grow at 1.2% when the population itself is growing at 2% per annum? I submit not. Still, it's good that, as Professor Parson has pointed out, government could really throw a lot of money into the problem currently and splash, saying we have an election coming up, we need to give people reason to think we know what we are doing. I submit that we are not yet there at this point, Kaya. I do not know if I've answered your question properly.
If I could just add a point, quickly build on that. I'm not sure that we've made it clear that whether it's the government of national unity or other economists, everyone is frustrated by the fact the country should be growing at 3 and 4% and more, at which you could begin to see less of a problem on the fiscal side, and above all, you will maximize job creation. The fact is, no one is satisfied with 1.8 average over the next 3 years, but at least one is going to consolidate what needs to be done to at least get 1.8, but to try and do better. I think the whole issue comes back to the reforms, whether it's Transnet or elsewhere. The important issue is that the good news is conditional on making things happen now rather than later. And I think that's the important message that comes through. And so when we talk about the practicalities, such as Eskom and Transnet, and particularly local authorities, where the biggest delivery challenge is, the fact is that that is now the priority of Operation Vulindlela. It was mentioned very strongly yesterday, and it's the layer of government that is crucial to getting some of the outcomes that will make the bottom-up growth. We mustn't only talk about growth being top-down. The bottom-up growth that comes from mobilizing business communities at the local level to add value to the economic performance of the country. That's the challenge we face, and that is why yesterday, even at a macro level, that needs to be percolated down to ensure that we have both top-down and bottom-up cooperation in making things happen and improving the country's economic performance drastically, way beyond the. I mean, we are reduced to actually being optimistic or pessimistic these days by decimal points. We must get past decimal points. We must raise 3 and 4, not 1.2 and less than 1.4. Oh, I'm optimistic. It's 1.4. We've got to get out of that, cross that threshold where we can build confidence in the future that we deserve and that our potential can be unlocked to provide. And that is
we need to break the bottlenecks. We need to break the bottlenecks, Professor. Dr. Chamin, one of the institutions that is always of critical importance in conversations of this nature is SARS. At the beginning of the year, SARS said, look, you can change your tax rates. You're probably not going to get much unless we are well capacitated to collect what we can based on the rules as they are and based on the tax rates as they are. We hear yesterday that they've had a good year, which means that we are thinking that there won't be any tax increases come the next year budget. What you heard about how SARS has performed, are we investing the right resources in ensuring that we get as much out of our existing tax base as we can before we start having yet another civil war around the potential VAT and tax increases as we saw earlier this year?
I think one must be encouraged by the fact that the government has actually put a lot of emphasis on actually improving tax collection and has been actually allocating billions of rands towards that end. And by all accounts, it is succeeding. The SARS is collecting more revenue than it had anticipated because its systems are now managing to seep through a lot of schemes that previously used to try and avoid tax. There's no question that that is important and helps to limit the extent to which actual tax rates have to be increased. And the positive thing to take from the latest MTBPS is that if you look at the savings in revenue that are going to be brought about this coming year, certainly 19.2 billion rand that they're currently anticipating. It could turn out to be, sorry, that's the overshoot of revenue. It could turn out to be, as I mentioned earlier, quite a bit higher than that if gold and platinum prices remain and rise high and rise still further. And that in itself is enough on its own to prevent us having to raise the rate of VAT by 1%. Hopefully, we overshoot by even more, and it will completely negate the need to raise the rate of VAT by 2%, which was the source of such problems earlier in the year. Having said that, there will be pressure coming on the government to spend more on social activities and social grants and that kind of thing. And the important constraint that they have to abide by is not to fall prey to thinking that by increasing the revenue on the one hand, they can afford to spend more on the other hand. If you're going to turn this ship around, you need several years of revenues growing faster than expenditure to be able to start reducing public debt levels. Having said that, what stands out so much about South Africa at the moment is that we seem to be following a far more conservative and responsible fiscal approach than many even developed economies. And I think that is starting to stand out very well. And we could well see our first credit rating upgrade in a decade, even as soon as tomorrow. And that's, I think, partly why the rand is now below 17 to the dollar, and why the stock market is up 3% today, etc. So that is the positive vibes that are starting to emerge. South Africa is taking the bit by the horns. Its government of national unity is doing precisely what the solitary ANC government was unable to do before. And that was partly why there was so much confidence when the government of national unity was formed a year ago.
Mr. Parsons, earlier on, we spoke about collaborations, and I think President Vulindlela has become the prism from what we've been talking about this for a very long time. There are other structures, whether it's the National Energy Crisis Committee and others. When we then identify that it is through these collaborations that we are able to swing the pendulum even 1 inch forward, should this initiative not become universally applied? Because right now it feels like there is a process of prioritization where a couple of issues get identified as key talking points or key focus areas, and then they get absorbed into these collaboration structures, whether it's Vulindlela or others. But surely, if there is a universal problem across the state, these should be rolled out universally rather than on a very narrow basis, if I can put it like that. What's your view on that?
Well, I think what's important here in this debate, and that's part of the public debate in South Africa, when we talk about Eskom or about Transnet and so forth, the issue is not to get drawn into ideology. I like to say, by all means, let's talk about privatization or nationalization or whatever it may be. I think what you need is pragmatism, and that's what's got to drive the decisions in the cooperation between government and the private sector. It's clear that there are things the government has not been good at doing. It is unlikely to become good at doing them because it perhaps shouldn't be doing them. And it should now recognize that this boundary must shift between the government and the private sector. And that is what's been happening with Eskom and with Transnet. The important issue will be show the results. Don't have an ideological debate. Say, we've gone into a partnership, look, it's worked. Here are the benefits. That's tremendously important. We must bring it down to a practical level, because that's how you will convince people that, in fact, a different formula for running certain sectors, where the government goes into partnership with the private sector, or it hands over the responsibility to the private sector. What matters are the outcomes. If you can show outcomes, and that's what the government of national unity has to do. Yesterday, remember, unlike the 3 budgets we went through before, that was a GNU budget. It went through the cabinet. And I think that explains a great deal of what it is in that budget that lays these excellent foundations for the future, getting the markets to react. I think, as an economist, I welcome the reaction to the financial markets, but the test, also what you're saying, doesn't lie on whether I'm happy about the RAND or I'm happy about the JSE. It lies in what do the people think is being delivered as a result of a better economic framework. So that challenge is there. We've got to translate the better financial news into real outcomes. We're not running a seminar, we're running a country, and we are accountable to show that what we advise will give tangible outcomes. And that's tremendously important. And I think that is one of the important messages that comes out of yesterday, and why we need to build on that in order to consolidate what we want to achieve in terms of real incomes, given a more favorable financial environment, which makes more things possible.
For that, Professor Siphonathi, I want to come back to you here and deal with the emerging political risk. So by the time we speak budgets again, we would have gone through a January 8th statement of the ANC. It is the same ANC that said a few weeks ago it has yet another economic blueprint, it has another economic roadmap. It is the same ANC that has to craft a January 8th statement that speaks onto the voters of November 2026 in the local government elections. Is there a risk that all of these good things we've been talking about can still be undermined by the prioritization, the political agenda of the ANC ahead of next year's local government elections?
Kaya, I think the ANC is really less important now than it was 3 years ago, 2 years ago. What happens there, honestly, they rely on other parties to do what they need to do. It doesn't matter what they really think. They couldn't pass the budget on their own, as the good professor has just pointed out now, and certainly they are co-governing. So I pay no attention to things such as the January 8th statement. It is what happens at cabinet level. It is what happens at parliament that matters. You have an ANC with 38% of the seats in parliament. And I must say, of course, the other parties, which a lot of pro-business South Africans, people who actually need the economy to get working, they have a lot less to worry about. If you look at what's happening at the parties like MK Party, the EFF, and certainly the ANC itself. So we have a lot less to worry about going the pendulum swinging to the left. I think we will remain on this good course that the GNU has brought for us, because what you have there, parties in the ascendancy, parties such as the Democratic Alliance, you will have seen polls indicating, of course, their own polls. I must also point that out. The DA's own poll indicating that they will come in as the biggest party in after the local government election. If you look at what's been happening across the country, at all these ANC-controlled municipalities, they have been giving away their votes to the DA. So I have a whole lot more reason to be optimistic that we will stay on this. Good course that Azarjamin has just spoken about. We will stay on the good course, and we will continue to manage the government properly. What we do need is a more ambitious leader as president. What we do need is a more ambitious finance minister who actually stands up and say, we will grow this economy at 6% per year over the next 10 years. That is what China did. I'm currently reading a book on Deng Xiaoping in China. They definitely decided what it is that we will do. In South Africa, as Thabo Mbeki pointed out a few years ago, we're just drifting along aimlessly, and now we're talking about 1.8% over the medium term growth, as if that's what we need. This country needs ambition at the top levels of government. We currently do not have that. We do not have a president that knows what they want to achieve. We do not have a finance minister that knows what they want to achieve. If they did, I'm open to be corrected, Professor Parsons. I'm open to be corrected, Dr. Jamin. What is the government's target to grow the economy? When do we want to bring unemployment back to levels that are acceptable? What are those levels? We currently have, at best, a 32% unemployment rate, if you don't talk about the expanded growth unemployment rate. What is the government's policy? What do they want to achieve?
Sikonati, we are completely out of time, and I think those burning questions are what we're going to be using as a springboard for the 2026 edition of our Pitso Conversations. And on that note, thank you very much for everyone for having joined us. I think the takeaway is that we've got a pragmatic finance minister, we've got perhaps a reluctant president who still managed to get some consensus for the budget, but what we need is a bit more ambition across the board. Thank you very much to everyone. Have a wonderful afternoon and a special goodbye to Marley, who has been the backbone of our Pitso Conversations for many years, who was joining us for the very last time. Thank you and have a good afternoon to you.
Thank you. Goodbye.
Thank you. Thanks, Kaya.
Thanks, guys.